Hey, Alpha fam, welcome back to another episode of Alpha Commission. Of course, today on Alpha Commission, we're going to go over the pump on the charts as well as the green in the stock market. Now, out of the last three calls that I made, one of them was a little bit to the bearish side. And so for Bitcoin, I will explain some type of error that I made. Of course, nobody's perfect, and it is important for transparency and for honesty to make sure that when we have errors that we examine them and look to see if we had correct thinking or not. And I think we'll find that I did apply correct thinking, but simply that the market decided to go in another direction. And then, for the two other calls, you can see that, of course, I was calling on Friday for a potential bounce on the S&P 500 and also one for Nasdaq, which had slightly different setups. And so we can examine those to see our wins and also to see if those have correct thinking and to update them. But overall, you can see that right now crypto is doing a little bit of a check back after a bit of a pump. And so you do see some red on the charts, but it was in fact a green day, and that can be easily seen by the stock market, which is just bright green, guys. And again, that lovely call that I was making for the potential bounce due to oversold conditions on Friday and on the technical merits. We can examine that when we talk about stocks, but it is nice to see. And Apple did recover its losses, so just barely holding that line, guys. But some of these high cap stocks are still in significant danger. And even if we have a little bit of a run, just to be careful, it is possible to get bounces in a macro downtrend and then still continue to the downside and fall even deeper. So make sure you're trading. I'm not 100% convinced that this is the bottom of the market. But hey, we can see that's just a hypothesis. That's not a call because we need to use conditions, right? Validations, and then also confirmations. And so that's how we work over here on those probabilities and on likelihoods, not on just up only, down only. I'm a psychic. I can call this. I can call that. No, we have to deal with the chart every day anew and fresh as it presents new data. And one of those data points came in today. It is the ISM Manufacturing Index. And as you can see, we did take a significant hit of at least a solid percent off of manufacturing. And, losing a percent of a business in 1 month and then over a series of months, if you just keep doing that, you are going to have a hiring freeze. You are going to potentially have to lay off workers. Manufacturing can often take like 6 months for a pipeline to develop. And so, as you see manufacturing slow down, this is going to hurt the economy. And that is Jerome Powell's intention. Of course, Jerome Powell is the chairman of the Federal Reserve. He was put in place by Donald Trump. Jerome Powell is a Republican, and he did concede eventually after lots of strong arming by Trump to basically do infinite money printing and 0% interest rates for essentially 2 years, even though we only needed it during the brief dip during COVID. It just was an infinite money supply. Infinite money supply. Not only the stimmy checks. The stimmy checks were nothing, guys. The real issue was the 0% loans, right? On trillions of dollars of loans and basically free money, because if you have a 0% loan, that is free money. And then on top of that, we had the PPP program, which basically billionaires and millionaires got all these business loans and they didn't have to pay back a cent. It was absolutely disgusting. One of the greatest thefts in the history of the American Republic happened during that Trump and Jerome Powell COVID years when Anthony Fauci was just on our TV every single day. And of course, Trump and Pelosi pretty much conspired to do that together for pumping up stocks for their own power consolidation. No, there's no one innocent on any side, but at the end of the day, there were specific people approving this, and they should be held accountable. And unfortunately, the way to handle that should be a windfall tax. If you were a billionaire or a millionaire, or you were making like $200,000 a year or whatever, if you had a windfall during COVID when the rest of the world was having a crisis, right? When it was an American crisis, a global crisis, a national disaster, a global disaster, and if you had a windfall, if you were making just money hand over fist, getting 0% loans, not having to pay back these PPP loans to billionaires and millionaires, then you should have been taxed on that money because all of that liquidity was printed from the American people. Even in other countries, that liquidity came from the United States. And so there's only two ways to take that back, guys. Two ways. One, you tax the wealthy, you tax whoever got a windfall off of COVID, you bring those dollars back in, you lock them back up, and so the money printing effectively negates, right? And you just get the growth out of that. But there was no interest in taxing. There was only interest in spending, right? Both by the Trump administration to the tune of $9 trillion, far exceeding Obama's administration. It was just an insane amount of spending, the third largest in the history of the U.S. Republic, following only the likes of like the Civil War. And then, of course, that just hyperinflation that came out of it. And so, if anyone's wondering why did the moderate conservatives and why did the libertarians and why did the economic conservatives, not the populist, the conservatives turn against Trump, and why didn't he get a second term? It's because if his policies were to continue, if Jerome Powell's policies with Donald Trump were to continue, it would have collapsed the republic economically. And this is a damn fact that we all have to realize and be truthful about if you want to understand why the world is in the situation right now and what's going on with the dollar, because Jerome Powell has a term. He can't be removed from office. The Federal Reserve is independent from politics after the president nominates the chairman. And so Jerome Powell had a term of at least 1 year into the next president, which of course was Biden. And so people saying, well, why didn't you turn off the spigot earlier? How come you didn't start earlier? Well, there's nothing that you can do. Only the Federal Reserve can make that decision. And so when it came time to renew the contract for Jerome Powell, Biden had a meeting with Powell, and they said, look, you're going to be on your ass in the street, Powell, if you don't turn this policy around. And that's when we got, of course, the messaging coming from the Federal Reserve that, perhaps in like 6 months, they're going to think about increasing interest rates. They're saying this back in, November 2021. And then Jerome Powell's contract was renewed, and surprise, surprise, right? As part of the condition for him keeping his job, he had to solve the hyperinflation that he had caused with Trump and Pelosi during the Trump years. And so then we've been fighting inflation ever since. And now, because of course Jerome Powell is, and I'm sorry guys to put it bluntly, but Jerome Powell is kind of an idiot. He's not known for being an intellectual in economic circles. He is highly influenced by those around him because he's just not great at this stuff, okay? But he is in charge, he can run the show, and he did catch up. He did understand what his mistake was, and now that he's recognized his mistake, and now that he's getting proper advice, he is fighting inflation. And the question is, because this guy isn't the sharpest tool in the shed, is he going to go too far? And that brings us all back to manufacturing, and we see manufacturing manufacturing slowing. We see signs of a recession. And so, is it time for the Fed to back off? A lot of people think yes, but Jerome Powell has said that he's going to continue to tighten interest rates in this market through 2023. And so we'll see how that actually goes. My projection is that they're going to be forced to stop in Q1 or at latest Q2. And so we should see the bottom of the market approximately spring 2023 in terms of a confirmation of the bottom. Now, the bottom could come, this month, it could come November, it could come December, it could come January. But in terms of a confirmation of the bottom of the market, I think we'll see that in spring 2023. And then we're probably going to have a deeper recession than some people would like, but probably not as deep as some people are trying to say, like, a Great Depression and all that. Most likely it's going to be just a global financial crisis. We're going to have to devalue stocks. That's where the real bottom's going to come in because earnings are going to get lower and lower every quarter because it's a recession. And then you're going to find out where the bottom of the market is. And we'll get lots of nice sideways action, probably for 6 months to a year. And then you're just suddenly one day it's just all going to explode. And there's going to be some issue where the Federal Reserve has to print money again. And then it's just all going to go up maybe in 2024, or it could be as late as 2025. But and then who knows, it could be 2023, the end of 2023. But statistically speaking, there's usually like a year time after the Fed makes the pivot before you start entering that real bullishness in the market and the market turns around. There has to be some type of time frame for the economy to heal when it's been in a recession. And so, we don't know exactly where the bottom of these things are yet. All of our information is delayed. And that's why it's so questionable. Every interest rate increase from now on is going to be highly questionable. But at the same time, we can see that inflation didn't stop by those PCE reports and the CPI data reports. And so we can see that, you know, we're really in stagflation, guys. We're in stagflation. Manufacturing is decreasing, inflation is increasing, and the Fed is using the only tool that they have, which is to increase interest rates to take away those 0% loans, that infinite money supply, right? Like infinite free money. And so to reduce the money supply in terms of loans and, to reduce the overheating in the market, because Congress, especially Republicans, but also some conservative Democrats, just have no appetite for taxing anyone right now in order to balance the budget, in order to balance the money printing that has gone on. And that's a shame on both parties. That really is a shame on both parties because both parties have spent like madmen, right? It's just on their own projects, right? And so whether it's the military or whether it's health, whether it's schools or whether it's COVID emergency or boosting the stock market in order to make your presidency look better, right? Like all of these guys have done this kind of crap and they haven't balanced the budget since that was a requirement back in the like the Clinton and the Bush senior, not W, but Bush senior years, right? And so, guys, we are in a world of hurt and it's just continuing, but that doesn't mean that we can't see bounces. So, rant over. Let's go ahead and take a look at the chart because now you understand why I'm macro bearish. And also, you can understand that we have a macro bear trend line, right? This just a macro downtrend that has been slapping us down every single time we approach this yellow line. But as I introduced to you on Macro Monday, we also have this kind of chief radial, this kind of midline trend support on our path to the downside, which every time we lose it, we just drop to hell, right? Lose it, drop to hell. But every time we get above it, we get a nice pump. It doesn't last forever. It's usually just a pump. And then we have a catastrophic dump. Just a pump, catastrophic dump, little pump, catastrophic dump, little pump, catastrophic dump. I mean, this one wasn't catastrophic, but we're still kind of like working on this zone, just like this little zone, just like this zone, just like this zone, right? But you do see just how hard we fall from this zone off of that macro trend line, which is even more macro and even more significant than this downtrend. And so, yes, guys, on this weekend, I made a judgment, right, based upon when I made my video, that there was a good chance that we could lose this line. So let's just check it out. If your wallet is in this market, it will be strangling that next. This is from the as it makes its next move. You can see that we were breaking down from that macro line, and we did have a wick lower, but we started to pop back up. And of course, when I made that video, I couldn't have known that move potentially to the downside, having explored the top side already and put in this. So here I'm saying we were wedged between the macro downtrend and this, just a midline radial. And since we were breaking down, there was a good chance that we could have a catastrophic dump if we do lose that. And of course, there was 35 minutes left in the day, and so I wouldn't know exactly where that candle was going to close. But I was suggesting closing under it would be catastrophic, and closing above it, yeah, no, we'd have another day to live. A weird kind of, it looks like a fairly bearish pattern to me, guys. And then if we just zoom forward just a little bit, you can see I set the conditions for where we could recover within the next 30 minutes. If we recovered over this momentum zone, this blue box here, right, and the white box as well, and then especially if we could get the green box, but that was just kind of a stretch goal. But if we could grab on top of that blue box, then likely we could avoid that dump, since we were just borderline on this critical momentum zone, which is just kind of like the thinnest support that we have. We were right there. And so it was an open question if we were going to dump or if we were going to pump. And my bias was to the downside. I said my bias was to the downside. That was my mistake. I made a bad call there in terms of my personal bias for the direction. But I did set the conditions for how we could recover that move. And so, again, sometimes it's wise just to preserve your capital and to protect your money. If you think that that line is so significant that you could strongly dump under it, and if we were having a potential volatility on the charts where we were either going to get a pump or a dump, then, and I didn't have a clear setup, this looked a little bit like a BART to me. It didn't really look like a bull flag. It looked like a BART to me that could come back down, reclaim this candle. And so I was thinking that bias was to the downside, especially as we were losing our momentum zone, our critical momentum zone, and then we also were not holding on our bullish momentum zone for the daily, and we were breaking that macro line. My bias was to the downside. Now, it did turn out that I was wrong about that, and in full transparency, in truth in advertising, just to be honest with you guys, I do want to say just how wrong I was, because no one can get it perfect, and the goal is just to get it, right more than 50% of the time, preferably more than 60% of the time. And so then you can keep trading, and overall you get it right. And so what happened is that at the end of the day, we did hold above that momentum zone. Let me change this to the daily. We did hold above that zone, that critical diagonal that I was pointing out here, right? This dashed line here. And so we did just barely hold on to it at the end of the day. You can see this red candle threatening to break down, wicking below it, but it did hold on at the end of the day. And then the next pump took us above that momentum zone. And so we were able to just continue to pump. And then in examining how it played out on the hourly, in the group, I did point this out, which is that right here is where I made my video. We were just starting to break down, and then we did recover it by the end of the day, and then we started to put in this little pattern here. And so in the group Discord, which you can join, it is free. Go ahead and check out the link in the description of this video, but you can get some type of insights. And here I was pointing out that Head and Shoulders, it had only played out halfway in this particular comment on it. And then you can see that we ended up pumping the full measured move to that measured move of that inverted head and shoulders wicked to resistance, so we actually exceeded the target, and now we can see that we're kind of chopping around. Whether or not we're going to be able to break out of this macro downtrend, I don't know, guys, but let's check out the key levels to watch for Bitcoin. And right here, I'm just keeping it on the chart so that you can see I did have, let's go to the 4 hour just to simplify it a bit. I did have this blue zone that we had to hold on the weekend, and of course we did end up exceeding that. We did end up holding both the dashed line, that critical radial, plus the momentum zone at this blue one. So I can go ahead and just delete that. And then also we ended up satisfying conditions for the 2 to 5 day, hanging on for bullishness for another day for an implication for the a longer term move. But of course, you have to wait for the 2 day and the 5 day to close. That's why we primarily operate for the dailies. I did update that, and so this is the new 2 to 5 day. I'm going to color that one white, and this blue one is the new daily, so I can just make that baby blue. And so this is our new levels that we're watching, guys. And of course, it does look like the 2 day and 5 day, as well as the daily, are pretty much pointing to the same critical area. Now, I calculate these things, guys, so this is calculated. You can see we're rejecting right off of the top of that area, and that is my critical zone. Personally, I'm not going to be playing this type of a pump or anything unless we can get above 19,000, just call it 700, and really have a couple 4 hour candles above there. And then today's momentum zone happens to agree with that. So if we're just talking about the minimum levels that we need to hold, then you are going to be talking about, oops, then you are going to be talking about 19,100. If we lose 19,100, then we're pretty much going to be out of luck. Probably we're going to be testing the downside of this range and perhaps losing that macro radial in the process. So watch out for the crucial level of 19,100. We do not want to lose that, guys. As for a little bit of a bullish level, then if we can secure above 19,650, that's going to be actually pretty incredibly bullish, guys. So watch this space. This could be a little bit of a bull flag. It could also just drop to hell, but this is very interesting, guys. So let's just pay attention. Right now, we're literally at the limits of this momentum box. So let's pay attention to where that goes. Let's throw on our EMAs for the 4 hour, and you can see that we are still in that squeeze that I was talking about that had potential back here before we temporarily lost it. We're back into that potential squeeze. Let's go to the daily for the squeeze. And you can see that we are in fact squeezing up on that daily. And if I turn off these drawings, and then we can just get a better look at our EMAs, you can see what happened. This was that point where I was scared, right, that we might have the dump on the weekend. We lost support temporarily, and then we did quickly recover it and get back into our squeeze formation. So this right here is the squeeze that I've been following, right? And then we temporarily lost it. Oops, that's why I was scared on Sunday. But then now we've recaptured it. And so the market is kind of teasing us with this possible bullishness, but we have not achieved the levels that we need to break out yet. So let's watch this space. Hopefully we can get some type of a pump like this one here. And then I would suggest probably this area over here would be something that we should look for, and that could be limited by our 5 day Stokes of 21,150, which was pointed out by Eric Crown. I do like to give credit when I do share an idea with. somebody that I respect as a trader, or where I got inspiration from their ideas. I like to point out who also is having similar thoughts. And so this does correspond with my thought on a potential pump here, going back to our daily EMAs. Dot, dot, dot. You can see that we do have the 89 EMA in that area. So if we do pump, that would be a natural kind of limitation. We have this exposed candle right here that does have an exposure up to 21,500. So again, that 21,000 to $21,500 area would be a limitation if we do get a pump, just probably on the first move. And then we actually have the weekly 9 there. So again, guys, recapturing both the weekly 4 and the weekly 9 would be incredibly bullish. But if we do go over to the weekly, you can see that we're just not there yet. Let's see, where's my EMAs? There we go. And we are starting to get into a look that could potentially see that type of a pull up. It's just we're not there yet, and we are at the macro downtrend. Um, Pardon me. We are at the macro downtrend right here. So busting through this is going to be very exciting for the market. And this is possible largely because the dollar is weakening, and we can get into the dollar a bit later. Let's go over to CME because I think you have the key levels for Bitcoin. And you can see, by the way, I just want to make sure that you guys understand that we are getting some resistance at that macro downtrend. That is not an easy level to defeat, guys. Stronger movements have tried and failed, okay? So this little baby pump here, I mean, this one couldn't even reach it. This one couldn't breach it. This one touched it, but is immediately getting rejected. This was a super strong pump, and it just completely failed. It's not easy to breach this thing, but the more times that we get it, get a crack at it, the more likely it is to crack and let us through. So we'll find out. The problem is the same thing is happening on this this midline radial here, right? This macro, just mid radial. I don't even know what to call it, but whatever this is that we're wrapping around, and when we lose it, we drop pretty hard. So we've also tested that one many times, broken through it, tested it again. If we come down here, it's very easy to drop through that. And we could easily see, going into the 17,000s, should we lose that line. Just so pay attention to those levels, Alpha Fam. Let's see, for the CME chart, the professional exchanges, of course, they were closed during the weekend, so I do just want to kind of recap what we saw there. And not really sure why my boxes get distorted like this, but this should be over here. And then this was the old one, like these were the numbers that we needed to see. We did not have the inverted head and shoulders the way that we had on the 24/7 exchange. So that was uniquely part of the 24/7 exchange. The CME chart, however, did have a little gap on the hour. You can see this gap right here. So we did pump to fill that gap. And in doing so, we recaptured this momentum zone that I had pointed out, and this was the old one. You can see that we were underneath it, right? We were underneath it on the second, but then on the third, right? The third, we actually ended up capturing it today with this nice pump to fill in that gap, and that's what put us over the momentum zone. And so we just kept continuing that way. This chart also has a radial. I'm not sure if I have it marked out. TradingView being a little bit slow. Come on, TradingView. And it's not loading my lines. Okay, there we go. Yep, and so you can see this one right here. Just make that dashed and white similar to the other one. And so as we follow it down, you can see that we're also critically at that zone on the CME chart. So now if I zoom back in, we'll be looking for the dashed line, and you can see, same thing. Yesterday on the weekend, we were underneath that critical line. We're above it, we're pretty bullish. Underneath it, we're pretty bearish. And so, of course, it was impossible to have a bullish outlook as we were losing that radial, as we were underneath the momentum zone, as we were threatening to lose these critical levels for our momentum. It was impossible to be bearish. We were, especially with these lower highs, and we're still having a lower high. And you can see that on CME, we have not recaptured. We didn't even tag our macro downtrend here, unless this chart is off. Man, come on, TradingView, load. Anyone else experiencing some troubles with TradingView today, huh? Must be all the volatility that we're having. Okay. Just take my chart away completely, why don't you? Let's go. There we go. Okay. No. So you can see that the CME, the professional exchanges, the macro downtrend, it actually has a different level. So we're looking for the yellow line right here. And you can see that based upon the macro downtrend for the CME chart, we never even tagged it the way that we did on the 24/7 exchange. So we still are well underneath that macro trend line on the CME. And so this is a divergence between CME and the 24/7 exchanges. It does imply that we do have more wiggle room to go before we could get a hard rejection to the downside. So let's watch this space. Hopefully, TradingView is a little bit faster the next time that we check this out. But we could still continue to pump and then lose this zone. Okay, so just be careful. We haven't fully tested that yet on the professional exchange. Now that you can see that we recaptured, the weekends, momentum zone, and we did not achieve the 2-day or the 5-day based upon that. Suggesting that there would be a limitation here. We do see that limitation playing out. The new zones that we have and these are the levels that we need to watch from now on. So I'm going to color them and an updated color. Oops, okay, this should be the daily, and then the white one is the 2 to 5 day. And so, we are above our daily momentum zone for what we need to hold on to for the daily just to be bullish. And that's going to be 19,500. These are our key levels to watch. 19,500 holding above that is going to be very bullish for Bitcoin. The minimum that we want to hold is 19,180. And we definitely don't want to lose 19,000 if we want to have some midterm bullishness here. And then our critical level is 18,600. You guys know that it's pretty much the bottom of our range. If we lose the bottom of the range on the professional exchanges, then of course we could go lower. But guys, basically, this is just the minimum threshold for momentum, and if we find ourselves falling down into that area, it's probably just natural that we're going to explore the bottom of the range anyway. So the levels that I suggest, if you want to stay bullish, we have to hold above 19,500. If you just want a solid chance, then 19,170 to 19,000, and then we don't want to be losing 18,500. So that's CME key levels. For Ethereum, just going to do this one pretty quickly. Ethereum also had just a major pop up here after having fooled us into thinking that it lost this momentum zone. You can see here, if I zoom in, Then on the weekend, we were down here. We had actually tested the momentum zone, broken down from it, totally lost it. But then because of the dollar, the U.S. dollar weakened, suddenly every asset in all of the markets, it's not just Bitcoin and Ethereum, like everything pumped because the dollar weakened, and so suddenly you saw that we recaptured that bullish zone, and so we did satisfy that. Uh, and it wasn't because of Ethereum. It wasn't because of the crypto market. It was because of the US dollar. That's the key point. Nobody could have predicted this pump. This could easily have just fallen over and died. But at any rate, we were at an area where it was possible to pump, and the dollar allowed that. So I'm going to delete this one because that was our old level. And then our old 2 to 5 day, we had to get above 1330. And look where we stopped, exactly there. So we weren't able to hold that. So this chart is telling us that on the 2 to 5 day, like kind of like, in the near term, but not right away, that perhaps there is some limitation on this chart still. And so just watch out for that. This is just another lower high, lower high, lower high, lower high in a series of lower highs. So right here's even a lower high. All of these are lower highs. And so we're not doing anything special, guys, okay? And so just to be very careful, make sure to take your profits whenever you see these type of pumps, because you don't know if we're just going to lose it. But anyway, you can see that we didn't hold on to the momentum we needed to for the 2 to 5 day as of the weekend. But now that we can update some of this stuff, this is our new 2 to 5 day. We are losing that right now as we speak. And then also for the new daily is going to be to retain bullishness. We want to see above that 13, let's call it 25, and then to have a strong chance, we want to hold above 1300 flat. And then let's look at these momentum zones, and then we critically do not want to lose 1280. Okay, so those are your key levels to watch for Ethereum. Do not want to lose 1280. You want to have a chance above 1300, and then if you want to appear bullish, then above 1325, let's say. Okay, and that's going to be your best case for Ethereum. Guys, let's go ahead and jump over to Ethereum CME, the professional exchange for Ethereum. And of course, I just want to point out where we were uh, on this weekend. On this weekend, we were significantly below the daily momentum zone that we needed to capture. You can see this huge gap that existed on Ethereum right here. And this is why I'm very wary. I'm very nervous about these type of pumps because they could just be fake outs, okay? There was a gap. You see this price gap? There's a hole there. There was this gap on Ethereum, and what did we do? We pumped to fill the gap. But filling a gap just to like provide information to get data isn't the same thing as being bullish. So we have not proven any bullishness. This was the momentum zone we needed to capture on the professional exchanges for Ethereum, and we failed. We absolutely failed it. And so that's kind of a problem. And then for the 2 day to 5 day, we had a little bit more wiggle room actually, surprisingly, but we also failed to hold those levels. And so that did imply that Ethereum is just not looking as strong as Bitcoin. Ethereum is looking a little bit sick. Now that we understand where we were, of course, we can get our updated ones. And so this one is updated, and the key levels to watch for Ethereum. Oops. The key levels to watch for Ethereum are going to be minimally, you want to hold above 1275. There might be some wiggle room to a 1250, but you're pretty much pointed everything down at that point. So 1250 is like the absolute, like that's like death. And then 1275, you live another day, but is it really a life, worth living? And then, but what we really want to see is holding above 1310. That's going to give us a chance, like a pretty good chance. And then if we are holding above 1330, that's going to actually look bullish. So guys, there is the possibility for continuation to the downside on Ethereum. I don't want to lie. So we're just barely holding on to our chance. Okay. So again, 1330, bullish Ethereum. 1310, there's a chance. And then we really don't want to lose 1275, guys. Okay. Those are the professional exchange for Ethereum. Moving over to stocks. Stocks was an interesting situation. You can see this green box and this green box here. I suggested that we were going to bounce in this area when we were in free fall up here. And so let's go ahead and just for a transparency's sake, let's go ahead and take a look at where I was talking about the S&P 500 last Friday after the market closed on Friday. Here, we are going to just, we're basically coming in contact with this green box that I have marked out. So there is the potential for a bounce here. And guys, that could end up bouncing us all the way up to these levels up here. So this was September 30th. I was pointing to get a retest on that. And this is what I'll be looking for. Since we did so you can see that I had that box marked. And again, guys, this is just for transparency, just to show like how we're doing over at Alpha Commission. And so that you don't think that I'm just making stuff up. Just occasionally I want to show you what we did. And so I showed you where I was wrong on Bitcoin. I was over bearish, but it was right for preserving your capital. The setup was not good at the time of making that video. And so it was the best advice I could give at the time. It just ended up being wrong because markets will do whatever the market will do. Nobody can be a fortune teller. And then, of course, the call for the S&P 500 here was based upon technicals on terms of our oversold conditions on Friday. And you can see, where did we get a bounce? We were mid-fall. Remember, on Friday, we were mid-fall. And then where did we get a bounce? Right at my green box. And what did we do? We satisfied my momentum zone. And that does suggest that we could continue to push up if we are able to update these specs. You can see we satisfied it for the daily. And so I can take that away. You can see we did not satisfy it for the 2 to 5 day. And so there is some question about whether or not this is going to endure, whether or not we're even going to get to this level. I can take this one away. And our new momentum zone is actually quite interesting because it's moved down. It's moved down, guys. And so there is the potential now for us to just hold this area, right? To have a chance, we want to hold above 36.44 on the S&P 500 mini futures, and then for bullishness above 69.90. Okay, and we are doing that, and so this is looking quite good. But we have to close tomorrow above those levels. Okay, so this is valid for 24 hours because this is the daily, and then for our 2 to 5 day, just kind of estimate, right? It's just an estimate because of course the 2 to 5 day take longer to close candles, so we can't know even tomorrow exactly. But for the 2 to 5 day, I just set up this zone, which does imply that if we maintain above 3630, that we are going to maintain some bullishness. And again, this is dynamic, so it changes every day. But right now, the implication is above 3660 gives us the best chance. And the reason I have both of these boxes is because I can average the bottom of our daily with the top of whatever box is formed by the 2 to 5 day. And that'll give me a nice area to consider as the bottom of our bullish zone. So for our bullish zone, the top of it is 3690, holding above 3690 tightly. That will suggest bullishness. And then we don't really want to lose 3660. As long as we're holding above 3660, then we not only have bullishness potential on the daily, but also on the 2 day and possibly the 5 day, right? And so, and then the number that we don't want to lose is the bottom of this range, which, of course, because this overlaps, I should use the middle one, is that 3640. Above 3640, we have a chance. And then just for our most basic minimum, we don't want to lose 3587. So there you go, guys. For the S&P 500, your key levels to watch: 3587 for critical support. You don't want to lose that. For just a good chance, you want to see above 3660. And then if you want to have continued bullishness, we want to close above 3690. Or at least anyway, those are the zones that we're going to be looking at. If we do throw on our EMAs on the 4-hour, you can see that we're squeezing. On the daily, okay, TradingView, hurry up. Give me my EMAs. On the daily, we are getting a little bit of resistance at the 9. We don't want to see a rejection there. But the cool thing is that we are getting this pump between the 4 and the 9. And so there is the possibility for squeeze pump all the way up to this green area, which 21 has come down to meet my suggested limitation here around 3,800. And that could give us a nice retest of our breakdown, where we broke down from some critical diagonal support, and then we could get a nice retest of that, and then perhaps we break down from there, or we continue to squeeze. It depends on the US dollar. Guys, going over to Nasdaq, you can see, oh, by the way, on the S&P 500, let's also check out the EMAs on the weekly, because we do need that reality check. You can see we're well under the 9, well under the 4, and just because we pump back up and test the 4 EMA, that doesn't suggest that we're bullish at all on the macro, okay? So this looks pretty bad. It does suggest that we could potentially go lower to this green zone that I have down here before we make a turnaround. So just watch this space. We did recapture the 200 EMA on the weekly, and that's what I wanted to show. We did get that bounce off of the 200 simple moving average, and then we're also starting to recapture the 200 moving average. And so those are good signs, but just to be aware that these EMAs overall are not situated well on the macro. So we do have to just continue to monitor this. Nasdaq, same thing. Okay, Nasdaq, same thing on the weekly. Pretty much the same setup here. Let me turn off my drawings. But you can see that we're still getting a little bit of resistance at the 200 EMA. But we were able to recapture the 200 simple moving average, and we need to close a candle above that. Otherwise, I'm going to feel pretty bad about this move, guys. So let's drop back down to the 4-hour just so we can get some more detail on price action. And let me turn off these EMAs. You can see that for the Nasdaq, which is the NQ1, the Nasdaq mini futures, we were underneath that area. But what did I suggest? Of course, we do want to review this for truth in advertising just on the Nasdaq. I did suggest we were going to drop down to this green zone, and then likely we were going to get a bounce up to my blue zone there. And so look, what did we do? We dropped down to the green zone, got a nice bounce, and now we're coming up to the blue zone. Because the Nasdaq is looking a bit weak, I did suggest that it could possibly dump down to this area. So we're gonna have to watch that. There's a little bit of a difference between the Nasdaq and the S&P 500, but overall pretty similar. We are struggling to capture the daily momentum on the Nasdaq. And of course, we are losing those. We haven't really recaptured the 200 exponential moving average on the weekly. And so NASDAQ does look significantly weaker if you just look at the nuance of it. If I update this zone, luckily for the NASDAQ, that zone has moved down. And so I'll give you the new numbers, but you can see that we were rejected from the 2 to 5 day zone. But that also has come down in the Nasdaq's favor as this market has been hanging out towards these lows. These numbers also kind of come down. And so for the bottom of this range, really we want to see us to hold above 11,200. Above 11,200, there's a really good chance of continuation, or there's a chance of continuation to the upside. And then if you want to just look pretty bullish, I would suggest Let's just call it 11,300. If we can close above 11,300, we're going to look fairly bullish. And then critical level to lose would be this 10,958. So let's just call that 10,960. And so there's your key levels to watch for Nasdaq NQ1 mini futures, right? Which is we definitely don't want to lose 10,960. We'd really like to hang on to 11,220-ish. And then if you want to look bullish, we really need to hang on to 11,300. And that's Nasdaq for you. All right, guys, I think I'm going to wrap this up just with a quick review of what happened on the DXY. Now, we did hypothesize that this thing could pop up, break down, and then continue to pop up. And I did suggest in both of my last two videos that China was likely to dump dollars, and so we could see a continuation to the downside, and we are getting that continuation to the downside. I think the threat of China to dump some dollars is very real, and so this market may want to cool off, in which case I suggested that this green area was probably a good first target if we do lose this dashed line. We are starting to lose that dashed line, and so there could be some good trading coming up, guys. Just watch out for this type of a turnaround. The dollar does that quite often. You see, it just, it pulls back and then immediately turns back up, right? Kind of pulls back, turns back up, right? And so this is a pretty typical pattern on the dollar. But I do believe that we are kind of beyond that. Up here, there was a question, but below this dashed line, I'm thinking probably we do have continuation to the downside. And maybe this kind of 1, 2, 3, right? And then there was a fourth one, this blue line, these four resistances intersecting within this circle. Maybe that was the top for the dollar temporarily. Okay, guys, and maybe we do get some good trading. We're gonna have to watch. We're gonna have to watch that space, and it really depends on what China does as well. VIX. VIX is dropping, so we did pop out of there. Not sure what's going on with the VIX, but I did say that there was this CME gap down here that we could potentially fill. We also had this kind of head and shoulders, which could end up breaking down. But overall, the VIX is just trying to hold on to here. So if you're bullish in the market, you can say this is a head and shoulders. We're going to break down, potentially even fill in that CME gap. As the VIX drops, the stock market should pump, and so should crypto. And then, but if you're bearish on the market, you could say, well, this is a bull flag-ish, kind of like a janky bull flag, and maybe the VIX is going to push up to a 40, in which case markets are going to dump as volatility increases like this. I could see both ways, but I do have a bias to the downside. I think both the dollar and the VIX are implying that a little bit of bullishness in the market. And also, the stock market is starting to hold on to its daily momentum zones, which it was losing last week. And then Bitcoin didn't break down from that macro, that radial that I showed you, and it also is doing some bullish things. Ethereum looking a little bit weaker, but also sincerely trying. So overall, in conclusion, these are it's looking like the trade setup is there. I'd just to be very wary, right? I'd just be very wary while we're at this macro downtrend for Bitcoin to just be going all in, okay? Because something weird can still happen. And by the way, guys, the volatility that was pumping here is coming from the 4-hour. And I mentioned that there can easily be a conflict between the 4-hour and the daily volatility. So don't get it confused. Just because the 4-hour was at the floor and is expanding to the upside, this thing could just turn back around at the midline or whatever. And so when the 4-hour is done, it's possible that the daily is going to take over. And do we see the daily expanding right now? Come on, TradingView, load. Just waiting for you, TradingView. Come on. There we go. No, we do not see the daily expanding. In fact, the daily is continuing to contract while the 4 hour is expanding price action to the upside. So if this thing does end up turning around, I mean, if the 4 hour ends up closing its volatility window, and the daily ends up expanding while the 4 hour is closing and the 4 hour was expanding to the upside, then potentially the daily could expand the price action to the downside. And this is how volatility can play off of each other. So just to be very careful, guys, like we really do need to hold on to these key levels and, solidly above 18,950, preferably above 19,100. And again, we'll just by default look bullish if we're above 19,600 on Bitcoin. Guys, that was your alpha for the day. Stay safe and happy trading.